You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. And if you listening to this show and you've never visited this site called wealthformula.com, it's probably worth doing so. There are lots of other resources there, and that's also where you're going to go to sign up for some of our lists. If you're interested in signing up for our accredited investor group, this, I believe, will be a good year to do that. If you are an accredited investor and you're interested in potentially looking at private deal flow, as I think that 2024 will be a year that will probably help people really change their fortunes in the future. It's one of those years, I think it's going to be an inflection point that much like 2012, that if people are of the right mindset, they can take advantage of some good opportunities and not wait till the froth comes back. Anyway, check that out. Wealthformula.com, join an investor club, because who doesn't want to be part of a club anyway? As for today, I want to talk a little bit about different perspectives, because I will be having my colleague, my fellow podcaster, MC Lobsher, on the show. He's the one who I'm interviewing this week. He's also known as the cash flow ninja. You know, it's important to have different perspectives. And let me just tell you a little story. So during college, I spent summers working in labs. And one summer I spent in the laboratory at the University of Chicago, where my biochemistry mentor in college, Dr. John Tomasco, who passed away a couple years ago. I just figured that out. That's really sad, by the way. But where he did his PhD, he did his he was the youngest PhD ever to graduate from the University of Chicago, the fastest PhD in biochemistry, and he did it as his PhD in a lab that was started by a Nobel laureate by the name of Charlie Huggins, a surgeon who won the Nobel Prize for discovering that prostate cancer, most prostate cancers were actually dependent on testosterone. So his discovery led to a lot of people living basically by removing their testicles, which, you know, that sounds painful, but it kept people alive, and it showed this hormone dependence of these cancers. Anyway, it's a big deal. Anyway, so Charlie Huggins ends up passing away, and his star student was a guy named by Shutsung Liao, who ultimately trained my mentor. And Liao was at the lab when I was there, and he did some trailblazing work of his own. He did a lot of interesting things with green tea, so anything that you know of that's related to green tea and cancer, which probably Liao was behind it. He was brilliant, and for a biochemistry geek like me, he was a fascinating character to be around. And the reason for that is he thought differently than most. His thoughts were truly original, right? He was trying to do different things. He wasn't just trying to piggyback on what others were doing. And that's what he demanded of people in his lab, his postdocs and students that were coming in like me. In fact, one of the things that he used to say, and it's sort of an unusual philosophy for an academic, was don't read too much. He felt that reading others' work and reading too many journals and all these types of things about the specific area that you were focused on actually could be detrimental, because it would sort of influence the direction of one's own thoughts. In other words, if you started thinking about, say some pathway that might be involved with cancer, and you kind of got stuck on that pathway and everybody's talking about that pathway, then you're not looking for other pathways, right? So he didn't want postdocs to simply follow and expand the ideas that others were proposing. He wanted them to have their own ideas. So anyway, that may or may not be of interest to you, but it's an idea that's always stuck with me, and it's reminded me. It reminded me the other day when a fellow podcaster asked me which podcasts I actually listen to. And he, of course, this person was assuming that I listened to a bunch of other personal finance shows, which maybe at some time I did. But I listed my top shows, and they included Purple Daily, Minnesota Vikings football daily podcast, and The Drive with Peter Attia, which is about health and longevity. The truth is, I don't listen to any other investing or personal finance shows. I used to, like I said, but I realized there was a little bit of an echo chamber in the alternative investing podcast ecosystem. And just like Liao had warned in that cancer lab that I worked in, I started just saying and believing what other podcasters were saying. If you go back and listen to me, literally probably about 9-10 years ago, I sound different. I sound like I'm, scared of the zombie apocalypse, and I'm talking about gold and all this kind of stuff. And anyway, I've obviously evolved, changed differently. I think differently, and who knows, maybe I'm right, maybe I'm wrong, but at least it's independent thought now. And it's helpful because I'm also fortunate enough to be interviewing economists and, other smart people every week. The show's gotten big enough, and the reputation is good enough so that we've got good people on the show, and I can just ask them what they think, and then I don't have to go to the echo chamber, so to speak, and just listen to others. One thing is clear about even the economists that I have on the show: they don't agree with each other, right? So if they don't agree with each other, there's clearly no fact. There's no clear answer what's on the horizon or what's happening. So you can think that sometimes if you listen to, a lot of the similar podcasts, that there's something very obvious that's happening, and there's not. So the moral of the story, for those of you who listen to me, I encourage you to listen to others, especially those who do not agree with me. It's important to hear ideas of multiple sources, from multiple sources when it comes to anything that you want to know about, and then that you might actually act upon. Same thing goes for my podcast on longevity, health, and wellness, which hopefully you're listening to. It's called Sapio with Buck Joffrey, right? I mean, I feel like I focus in on the hard data and the science that is when I tell people what I think's going on. But, there's others out there that you might want to listen to as well along that line. I certainly do in that space because I'm still learning a lot. But on the other hand, economics is not a hard science, right? It's hard because you can't just go to a journal and cite a bunch of studies that have statistical significance and say that this is very likely the truth and this is what's going to happen and all that kind of thing. Economics is a social science, and it's based on theory. Similarly, if you look at personal finance, we talk about personal finance and philosophy. Similarly, personal finance is personal, right? That's why it's called personal finance. So it's best, again, to learn a lot of different perspectives and philosophies out there and see what resonates with you. And sometimes it's good to get together with others and maybe compare notes. And that is exactly what I'm going to do on this week's Wealth Formula podcast. I am sitting down with another well-known financial podcaster and overall good guy. His name is MC Lobsher. He's, he talks to a lot of people. He's got he publishes a lot of podcasts and been at this as long as I have. We're going to sit down and just basically compare notes, see what he's hearing, see what I'm hearing, and just give you a little bit of a perspective from somebody other than me. And we'll have that when we come back from these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is a fellow podcaster, and he is a good one. His name is MC Lobsher, otherwise known as the Cash Flow Ninja. MC has been on the show a few times. He's a guy in the ecosystem that I think a lot of. He's a very good guy, and I think I think it's important to kind of understand who it is that you're listening to. And I can personally vouch for MC as a guy who's looking after your best interests. So, with that, welcome to the show, MC. How are you?
Very, very good. Thank you. Great to be here, Buck. Always enjoy our conversations. So I've been looking forward to this one.
Yeah. So, we were just kind of talking. We figured to make an interesting show. I mean, you and I both, we talk to a lot of people. We interview a lot of people. And we're in sort of some unusual times. What What kind of general themes are you getting in terms of the economy, like where we are, what's happening, and why? Because there's some unusual aspects of this economy that don't really follow the rules. What have you been hearing, and just your feedback?
Yeah, I've had some extremely interesting conversations with guests on my show, and I'm also part of a lot of different networks, and I'm actually in this one particular group which involves like money managers all around the world. So they're all over the place, hedge fund people, influential people in the financial world, and so forth. And it's interesting, the conversations that's going on. I think some of the themes, here's some themes that are sticking out. And I kind of summarized it as almost like wealth maps, right? Because sometimes you could use certain concepts as kind of a map, right? If you're trying to go from point A to B, you need a map. And then it's like, okay, what vehicle am I using? Is it a car? Then I need a road map. Is it a train? I need a rail map. Am I flying this aerial map? So some of these maps that have been shared is there's a couple of them, and it involves cycles, right? The maps include cycles. So sun comes up in the morning, goes down in the evening. That's a cycle. There's 4 seasons. And I just want to preface that because when I share these cycles, people think I'm either very optimistic, overly optimistic, or they think I'm very pessimistic. And I'm like, no, if I'm standing on a beach in the middle of summer in my Speedo going ready for a swim, I'm not optimistic. I'm just dressing for the weather, right? And if I'm in my ski boots, all bundled up, in Telluride or somewhere in Colorado in the middle of winter, I'm not negative or pessimistic. I'm just dressing for the weather. So some of the maps and cycles that they're sharing, there's a ton of it coming together, right? You've got empire cycles, which a lot of people have been talking about, where you have an empire that is pretty much stretched and at the end of its ropes and just hanging on. And the rest of the world are seeing this. And previously to dealing with the American empire, with the U.S. empire, everybody would kind of like stay in line. But, just like in a classroom with a teacher, all the kids are quiet, but then the teacher loses control of the class. And now there's slight chaos in the classroom. Yeah. So you got a couple of difficult children to deal with that are seizing an opportunity. And that's kind of what's happening. And you see all of these geopolitical things. I mean, pick your spot in the world. It's all over the place. And this is just, the central theme there is there's new alliances being formed. They've already been formed economically. Everybody knows of the BRICS. The next thing is military alliances. Once the U.S. went out of Afghanistan, who sat down with the Saudis the following month? The Russians. Yeah. So you had all these different alliances being formed. So there's a little bit of a power shift. So that's one theme that people are looking at and seeing how this develops. The other theme is, of course, the monetary system. Currencies come and go, before the United States became the global reserve currency, it was the British pound. And you've had all of these different empires at one stage that had that mantle. And I think the difference, and this is why I appreciate our conversations too, there's a lot of doom and gloom sometimes in the alternative space. And it's like, well, the British pound didn't the British pound didn't collapse. And it wasn't like Mad Max and the end of the world and all these things and went away. No, it was a power shift that went to the U.S. and they're still a player. The British pound sterling is still there. It's still being used. They still have a bond market. So you've got that going on. And then if you look at the economic cycles, when you get to like global and now, there's 4 cycles, right? You have a economy that starts, that grows, that reaches its peak, it declines, and then it like basically hits a trough. And then it recovers again. And I feel like from a lot of the people that I'm speaking to and a lot of the groups that I'm at, we're off our peak. and we're kind of into the declining phase. And again, this is not negative. This just presents a different environment with different opportunities. And then, of course, we've got market cycles in between these, and all of the different asset classes are so different, right? You can argue that we've already seen, if your listeners are familiar with like the psychology of the Wall Street kind of mindset, I think that chart made its way all across the internet to showing where we're at. But essentially, it starts with depression, and then that's where it's blood in the streets. The professionals are coming in. In the depression phase of a market cycle, this is where you hear stuff like this: tech is dead. Well, Google and Amazon didn't get the memo. We also heard, you probably remember in 2010, 11. Remember how we read in the newspapers how they said real estate will never, ever be a good place to warehouse money or to invest in ever again. Like you'll never make money again. So you have that depression phase, and that's when the pros come in. You get an uptick, you get a recovery going. More people are coming into that space. Eventually, that starts to take off, accelerates, and now the market is there. It's real, and everybody starts piling in. And then when everybody starts piling in, you have overexuberance. You've got people doing a lot of irresponsible stuff. If we think real estate, it was 4 or 5 houses with all these mortgages because you just refinances and buys, right? Because real estate just keeps going up. Eventually the music stops. In the crypto world, by the way, we saw the exact same thing in the last cycle. You had custodians, which are no longer around, by the way, like BlockFi and Celsius, where people would buy like crypto, collateralize it, buy more crypto. And I'm like, that's basically what happened with the mortgages in 2008. And then, you know, of course, the smart money is out before then. They go into capital preservation mode, and then you've got a sharp pullback. And this takes a while, and eventually the smart money comes in and just buys it again, right? And more wealth shifts from the people that already have it, the smart money, again from the general public. So that's some of the themes. So the big theme, I think, like a lot is like, you know, you've got to play defense and you got to play offense in your wealth strategy. And at some stage, you play a little bit more defense than what you play offense. Because that eventually, I mean, there's so many cliches. Defense wins you titles, offense wins you games. You know, when I was a young kid, in South Africa, I took boxing, and I did karate too. That's where the martial arts kind of stuff comes in. But I remember a boxing coach telling me, you know, in the beginning, it's all you do is basically just get your stance, protect your face, duck, weave, you know, and strength and conditioning. And I was like, at one stage, well, when do we start hitting like, you know, bats and other people? Like, I'm here for the boxing, right? And the coach said to me, he said, MC, the first thing that you have to learn when you're going to be a boxer is not to get punched in the face. The second thing is to go punch the other guy in the face. Yeah. And I said, okay, well, that makes sense. So it's kind of a similar kind of thing when you think about wealth right now. Is the theme is, do you play a little bit more defense, focus on capital preservation, and still go after opportunities that are available, but you just change the game a little bit?
Yeah. I would say a few things, a few comments on that. As far as like the global stuff, I think that is like sort of been an ongoing conversation for a long time. And I think the alliances that are out there, the BRICS that you're talking about, the Russian, Chinese alliances, those kinds of, I think that in a lot of these conversations, though, there's an element that I think that people that people ignore a little bit. I think that prevents some of these major things from happening. And for that part, I would say military strength. It continues to be the case that the United States is the most powerful military in the world by a long shot. And messing with our economic system, we'll almost, look at what happens to leaders when they go down that road, right? They don't last long. And so, that's one thing I would say. Now, not to say that there's not some potential for some global, reorder and stuff like that, but I do think that people underestimate maybe the the strength of the military industrial complex and all that in the U.S. that prevents some of these larger global things from happening. Now, you look at like the pound sterling and the British losing control. They didn't. I mean, they were, again, they had military might, but then they didn't, right? And they weren't able to protect their position. As far as the economic system, one of the things that I've noticed and what I've talked about is that, there is a discordance between what the numbers show and what people feel. And I'm of the opinion that we're looking at the wrong numbers, right? Like so it's almost like we're used to driving in the world of cars with gasoline. And and we're still looking at how much gas we got left. We're looking to see if we need an oil change. But in reality, this world, there's a Tesla. It's an electric car, and we should be paying attention to other barometers. So whereas like we used to look at these unemployment numbers and all that. It's the reality is the way that these numbers are being calculated right now is very challenging, right? Like you've got part-time jobs, you've got people out of the workforce after COVID that never came back. You've got all those kinds of numbers. Then you have GDP growth. What is GDP? It's basically activity, right? I mean, it's activity doesn't necessarily mean a lot more than that. So, and in the meantime, we've got this, huge inflation issue, and so they're just the thing that strikes me is that we are in a you talk about cycles, and I think I would take comfort in the idea of cycles if I could, but it just feels like the rules are all off. It just feels like the rules of the game have changed, and I don't really know what the rules are. So so where do you look for what's going to happen next if you can't if the rules have changed? If the goalposts have changed, you know what I mean? So that's kind of an ongoing theme, and I've been trying to get my head around, and I still can't. So.
No, it's to your point too. So with a lot of the stuff, globally, unless there's a massive event coming out of left field, black swan or a gray rhino, as I call them, being from South Africa, you could see those a little, you could hear them, but sometimes it's a black swan, sometimes it's a gray rhino. Unless something like that, it's not going to happen, during our lifetime. These things take a while. What's interesting though is because of how the dynamics have played out is the capital flows and where it's flowing to. And there's so many different things that are being forced globally, I think, in the marketplace, which leads to a lot of distortions, right? Yeah. Whether it's energy markets, in the commodity markets, we've seen certain things, but it's interesting to watch the capital flows, how countries and regions are positioning itself. I've got several friends that live in Dubai, and the inflow of capital into that place has been quite crazy. So there's been a lot of folks.
So what are they, with money flowing into a place like Dubai, what is that money going into? Like what, I mean, I'm curious what are they investing in Dubai?
Yeah, so businesses, there's a lot of businesses there. There's a lot of, there's some real estate already that's kind of taken off already. The real estate there, but it's just interesting, like a place like that's kind of stayed neutral and welcome all capital from all sides. You got people from Europe, you got people from Asia and so forth. So that's interesting. But to your point, like the whole cycles, there's so many things that I wouldn't say it's new. We've never seen it. We've seen disruptions, but like take AI, for example. It's going to disrupt so many businesses and so many industries, and it's underlying that there's a lot of disruption happening, and a lot of people that don't understand what's going on, they get caught a little bit off guard. So, to your point, a lot of people feel, oh, well, the economic numbers doesn't make sense because this is what I'm experiencing. But then there's the AI side coming in. So you might have folks that, their wages have stayed flat and they're struggling, but unbeknownst to them, AI is basically already about to roll in and basically take jobs in the field or in the industry that they're in. So there's so many things happening. I have to say, this is a very interesting time to witness all these different things. It's not boring, if that's for sure.
Yeah. So we both obviously talk about investing, and your your show, you're known as the cash flow ninja. So you and I both are a big fan of these various insurance products. I talk about our version being wealth formula banking, and some of the other types of index universal life leverage products, and we have velocity, the wealth accelerator, some of these things that we call we've got some names for them, but bottom line is they're all very similar things. I find that right now, that's certainly one of the things that I have been suggesting people look into, because again, in a fairly volatile market, insurance products have a pretty darn good track record in these spaces. In fact, if you look at something like a indexed universal life type product, which we call Wealth Accelerator, having the guardrails, on the downside and being able to take the upside and leverage it, volatility in that situation is actually really a good thing. So I'm curious, is that kind of how you've been talking to your group too about stuff?
Yeah. So if you think about how a lot of people are feeling, investors, they feel a little bit uncertain. There's like, how can I say, not confusion, but people feel uncertain. They're not seeing a lot of stuff that makes them feel overly confident that this is going to definitely be a hit if I invest in this, which is interesting times to invest in. So the first thing is that then obviously you have to have a pretty good strategy where you have several buckets. And the insurance bucket is a fantastic bucket to have guarantees, to have predictability, to have that security, to have that certainty in a very uncertain marketplace. And that's why cash is a big part of, the strategy right now that I'm talking about. And where do you protect capital right now, right? We've looked at the banks, which is very interesting to see what's going on there. We've already had 7 go down. What is it? 10 been downgraded, 11 on a watch list. And you've got actually a lot of disruption within the banking industry. I just spoke actually over the weekend to one of my friends, which is a banker, and he was just saying that even on the retail banking side of how many locations they were closing, and of course this makes news. People draw their own conclusions. Oh, all these locations are closing. Well, there's a lot of technology rollouts. They don't really need all these physical banks anymore. You're going to have one center, and you're going to have all these satellites, which is going to be mostly ATM kind of place. But anyway, capital preservation is huge. So if you look at track records and where to put cash, the banking system, I don't know, that doesn't make me feel warm and fuzzy. Yeah. If you look at what's going on in the financial world, if you look at bonds, it's not worked out very well for a lot of people. And you've got a triple threat risk, whether it's interest rates, whether it's the counterparty risk on a bond, whether it's what the bond's denominated in. Like I said, I'm in very interesting groups where a lot of people are trading different bonds from different countries, which then your currency risk exposure is a big one. So that's kind of a no-no. So yeah, the insurance bucket is a pretty good one.
Yeah, and you talk about the strength of those companies. When we're specifically talking about some of the banking models, we tend to use Penn Mutual a lot. There's a company that's been around since the Civil War and managed through the Depression and hyperinflation and all that. And if people go back, and if they, at this point, those people are mostly dead, but the people who lived through the Great Depression, these were people who, were really clung on to their whole life, their life insurance policies. That's all they had left after that, right? And and so there's a significant value component to that, and beyond that, also the we call it sort of investing with benefits. Your yield may be similar to a bond or something like that, but on top of the fact that you're creating legacy, but you're also effectively able to use that as leverage for other, cash flow investments and things like that. It's just a very strong, strong play in my opinion right now, whether that's on the whole life side or if it's on the index IUL side. So.
Yeah, if you think of those companies, Buck, and you're spot on. I mean, how far do you want to go back? I always say how people and institutions are going to behave in the future. Probably want to look at how they've behaved in the past if you're trying to guess that.
Yeah.
And I mean, you look at the Civil War, where you literally had two countries with two presidents and two congresses and two types of currencies.
And currencies.
Greenback and
greenback. That's right. That's right.
Right. And they were still profitable. Like, how crazy is that? Can you think of a crazier environment?
Yeah.
And then the other thing that people don't think about is companies, like you mentioned, such as Penn Mutual, it's been around since 1847. What people overlook sometimes too is there was a massive banking crisis, like around the Great Depression, right? That led into the Great Depression. You had a banking holiday in the United States, right? Banks were closed, right? And during that time, those companies still produced a dividend, which is profit sharing, basically, with their policyholders. So even during that time, we had a banking holiday.
Right.
And if you don't even have to go back that far, we sort of had a banking holiday and a stock market holiday during 9/11. Same thing. And during 2008, 2009, you remember that? That was a lot of fun.
Yeah.
And they still, I mean, these companies were paying between 6 and 7% dividends. So yeah, it's definitely a very a foundational piece. And then, other physical things, if you just look again at what people are going to need, they're going to need a place to stay. They're going to need some food, some clothes. I mean, you look at all the different things that is lost basically on the chopping block, really. Those are, and especially if they're physical, I think, are they going to have challenges? Of course they are. But I think you're going to be okay to position that. But you do have to be diversified. You have to put yourself in a position where you have different buckets and you understand why you have those buckets and you understand that those buckets are going to do different things for you.
Yeah. And I would just say too, that whereas this is something I think, if people are worried, I think it's a good time to probably look into these types of products that are most stable, probably risk adjusted. It's hard to beat these types of things. But the other part of it is I think it's important for people not to become too scared to do anything. I think people, including myself, have lost some money in this, in these days. And I think that's a real eye opener because, I think, if you look at this market, it's been a bull market, real estate and pretty much everything since, for 14, 15 years. And that is not normal, right? It's not normal. So we have a lot of people who have gone their entire adult time in investing with having never lost money. And we think that's normal, right? And it's not normal, but it's really hard when you actually do lose money to accept that that's part of the deal when you invest. The goal is, hopefully you're making money most of the time, but there are going to be periods of time when you lose money. And when you do that, you can't give up, right? Because right now, I think one of my colleagues, talked about 2024 probably looking a lot like 2010. Right, where 2010 was sort of the time where people really could have picked up a lot of assets and rode out that cycle, the next cycle, and made a lot of money. But there was a lot of people who were too scared to do that because of what had happened. And so there's a balance there for sure. And I think being able to have the courage of your convictions try to think rationally is what makes a difference between somebody who's going to ultimately long-term make money and someone who's not, and try to understand that losses happen. They happen. They're real. So.
Yeah. And that's why you have to have in your strategy, you have to be diversified and be balanced. I had this conversation within my community, that, there were a lot of folks involved in crypto at one stage too. And that's a cycle, and that's a very quick cycle. It's
you learn a lot.
4-year cycle where you have like 10-year cycles that just say in real estate. Things could happen very quickly there. And we were talking, you probably remember this. You remember the crypto Super Bowl. Everybody remembers the crypto Super Bowl. The crypto Super Bowl, when you have Larry David going on every other ad talking about crypto, and you've got Matt Damon calling out your manhood, basically, if you don't buy, crypto on whatever platform he was advertising. That's a top. That's a huge market top.
It is so hard to recognize froth when you're in froth. It's amazing. And you look back and it's clear as day, but wow. I mean, people were just buying, right?
Once you're in it, like you said, it's tough. And I remember people were reaching out to us and they're like, after that Super Bowl, should I be buying crypto? I'm like, you should first study and learn how it is, learn the 4-year cycle, look at what happened in 2017, same kind of cycle. And we're headed into another one now too. It's a wild roller coaster ride. But what we shared with folks too that got caught on the other side of that is, if you feel deflated and depressed and all that kind of stuff, you probably were overexposed, and you didn't take it off the table. Looking at that cycle in the right, you wanted more upside, right? You should have taken off at a certain level. So I think like in this market cycle we're at right now, we talked about having a bucket of allocation for like guarantees and security and safety. Yeah. Another thing that we're talking about too is tax strategy. Yeah. And also we're talking about estate planning, which I think is very important for your audience, Buck.
Yeah, for
sure. So the whole thing about taxes is like, and you have covered this so well and talked about this with your guests, but I mean, to defer taxes right now into the future is almost insane. Yeah, because I mean, if we look at what's going on, just with the debt that everybody's in, pick your country, they're all into debt that they cannot possibly repay. So, and of course, politicians they don't have a lot of solutions. It's going to be raising taxes and making cuts somewhere. That's usually the playbook. The other thing I also just wanted to share, which is very important, is the changes coming to the tax code. And this is a huge conversation that we're having. On January 1st, 2026, a lot of people might not be aware of this, but the Trump tax cuts, especially to the estate planning side, those are going away in January 1st, 2026. Yeah. So what does that mean? So that means for folks that are high net worth folks, and, I can pull up some very, very specific numbers just so that folks, because they just released the numbers for...
They're basically cut in half, right? Roundabouts, I think it was 20 million for a couple. Now it's going to be 10. But what that means is if you're an individual, like a single guy like me, it's like just over around 5-6 million, which, I would say at least half my audience has a higher net worth than that.
Yeah. So right now, 13.61 in 2024 for individuals, 27.22 million for married couples. It's going to 6.8 million for individuals and 13.61 for married couples in 2026. So to your point, now there might be folks listening to this, right? You could have let's just say you have a net worth of 20 million. Well, this is something that you should be very proactive right now and not hold this off till the end of 2025. Because of course, do you pass away before January 2026? You're fine. But you pass away after that, now you're in trouble. And it's the same thing for someone that has a net worth of 10 million. If you have a net worth of 10 million right now, you're on the upward trajectory. That means by when the time comes, you're going to outkick this estate tax exemption big time. So I would be proactive in that. That's kind of the conversation that we're having with folks. You might have 10 now and you go, well, I could make a couple of things here and there and be fine. Even if you're at 5 really and you're going towards an upward trajectory, you should be planning. And there are strategies. I'm not a lawyer. I'm not a estate planning specialist, but there's a lot of strategies that you can do and be proactive on this, because to your point, and there's a lot of things that people have to think about, a couple of years out.
Yeah.
I think this is time and capital well spent right now.
Oh, 100%. In fact, I would call this one the stupid tax, right? The estate tax. And people call it the stupid tax because the reality is there's a lot of ways to avoid the estate tax, but you got to do something about it. And I'll just give you as an example, we've talked about on this show, the use of various trusts. I have a Nevada Dynasty Trust, and some of my businesses I shouldn't even call them my businesses, but some of the trust businesses were started in the trust rather than for me from day one. They've never been in my estate, and so this is there's lots of things that you can do there. The other thing I want to point out and to emphasize that you mentioned is that a lot of people don't think that this is relevant to them. And I guarantee you that's a mistake. I would say if you are a high paid professional, which represents the majority of probably of the people listening to my show, that if you're making $500,000 to $1 million a year or something like that, you are going to accumulate wealth that will, I guarantee it, will exceed the limit of the estate tax at the time of your death, because that number is just coming down lower and lower and lower. And it's going to have to, because there's, as MC's talking about, they're just trying to figure out new ways to generate revenue. So actually, I did an entire podcast on estate planning. If you want to go back if anybody's interested, go back to my back to school session in September where I hit a lot of these things, but there is lots of things you could do. Speaking of taxes, have you, MC, heard about this case Moore versus the United States in the Supreme Court coming up? It looks like there'll be some sort of decision it's by the summer, but it's a pretty big deal. It's around this concept of taxation of unrealized gains, and that is a big one, right? So if you're talking about, whether it's legal ultimately to tax people on money that they've actually not received, that decision is going to be made by the Supreme Court. And what's interesting about it, and I think that luckily the Supreme Court right now is a little bit right leaning. What they're doing is they've probably taken this. I talked to a tax foundation guy. Said usually they don't like tax cases, but basically the lower court unanimously took this, basically just decided that it was legal for the government to tax unrealized gains. And so then the Supreme Court took it. And so hopefully the idea is these guys are going to say, no, it's not. It's not okay. But it's a big one, and it's something to keep an eye out on, because it's gonna be there'll be a lot of legislative issues if the ruling either way actually is going to change a lot of rulings. Because, for example, we talk about in real estate or in any kind of investment where if you have cash flow, but that cash flow is being reinvested into the property right now, you're still paying for those unrealized profits. But in this model, that would be eliminated if the court decides against it. So there could be some good stuff, not only some not bad stuff, but some very good stuff that comes out of this, or it could be really bad. So something to pay attention to.
Yeah, it's going to be interesting.
Yeah.
And somebody actually asked me on the weekend when I was sharing more information about this estate tax exemption, because we were talking about things we should be focusing on, and we've already covered all three in this the show, having that security bucket, proper tax planning, and then estate planning strategies. But the question that I got was, well, what if the government does something before that expires? And I started laughing, and I said, listen, it doesn't matter. I mean, it doesn't matter the balance of Congress.
Yeah.
The overall environment, basically, to your point, is that there's not a lot of people with solutions, so they're going to tax. Dead people don't vote usually, so
right.
where to grab a whole bunch of it pretty quickly and pretty easily, right? And then the other part is a part of it too, is regardless of what side of the political aisle you're looking, the overall theme globally, whether it's in Washington D.C. or any other country, you've kind of got the eat the rich kind of thing, right? Tax the rich. And my message to folks would be that if you're a high income earner, 10, 15, 20 million dollars in net worth, that's where they're coming for it. The Buffetts and the Gateses and the Oprahs, they've taken the pledge, folks. They've already got their estate planning in place, right? They've got their foundations.
Yep.
They've given it all away. They're good. They're not going after those guys and gals. So, so just make this a priority to take a look into it. Another strategy that I'll share quickly, you shared some with trust, with irrevocable trust and so forth. There's even, irrevocable trust that you could set up life insurance focused trust,
sure.
right? ILETs, you could put it in there. For children, the gifting is up to $18,000 per parent, per child. In 2024, so there's $36,000 basically, if per child, that you could throw in and eventually accumulate other assets within that trust, which is outside of your estate. So again, not a estate planning attorney, not a lawyer, but there's so many things that you can do. Yeah. So to your point, don't pay the stupid tax.
It's a stupid tax for sure, but and one more emphasis on that. If people want to do that kind of thing, the importance of doing this early is if you've already got a net worth, that is key, because you're basically, if you can get money into those trusts ahead of time, then you're grandfathering yourself into those laws, right? Like they can't back it out. Once it's in there, it's in there. They may try to back it out, but there's no way they're going to be able to do that. So that's a key element. But anyway, that's it. Yeah, that's definitely good advice. Are you looking at anything else that's unusual in the cash flow world that we should mention? I know you're that's your thing, but you talk about a lot of the cash flowing thing, which is great. I mean, I think one of the things we should probably bring up though is I think in this space this is a space that really requires due diligence, right? It's really important, because what we're seeing is situations, particularly in the podcast ecosystem, of some things really blowing up, and some of them being like Ponzi type schemes. We've seen things that just maybe were not stress tested as much as they should have been. We've seen foul play. I mean, the thing that's I think really tricky for people, it's one thing to lose money because the market, right? Because you're supposed to once in a while lose money. You're going to, whether or not you want to, you're going to lose money at some point if you're an investor. But what you don't want to have happen is people steal from you. Because that's a completely different level of things. So when you do, because you're a big cash flow investor, how do you make sure? What's your process? Because I mean, gosh, we're getting to the point where if it's not real estate, we're going to require third party verifications, things like that, and then you get into stuff. It's a different world of regulation and stuff like that. So where's the balance there for you?
Yeah, I think so from an exploring standpoint, even in the podcasting world, right? We vet if we have someone on that has a interesting idea to share, we really do our background checks and our due diligence. And sometimes it takes so long. And that's why, when we bring out a new, fresh idea, people are like, why didn't you bring this earlier? Well, we've had this idea for a long time, but it's taking us up until now to basically do our due diligence and feel comfortable to publish an episode on it. So to your point, you really have to, because there are nefarious characters and undesirable characters in every industry. And unfortunately, when you've had a massive bull market run, from 2012, I would say, up to 2022. What a run.
Yeah.
I thought it would end earlier. And then, you kind of got the the bailout packages and the relief funds and all the stuff in 2020. So that just brought another wave of just capital into markets. So when the tide goes out, what is it Buffett saying? You see who's been swimming naked. But you should definitely, due diligence is like, I can't overstate that. And even start small, and even, go to the point of interviewing and talking to people who's been working with an operator. There's some very interesting things that we've shared and that we've looked at. One thing that's fascinating is where people have positioned capital to protect it and just grow it. It's not much of a cash flow play per se, but it's more of a capital protection and capital appreciation play. Mm-hmm. So things like fine whiskey, which is fascinating.
Sure.
And there's been a lot of people, very high net worth folks and people in my network that have invested in that. And again, that's also, you have to be so careful there. Who you work with, who you invest with, what time. There's a minefield right there.
In that
one niche.
Look at here. The other thing with that is that and I've tried to explain this to some of our folks, is we've had things where we're doing and then we'll stop doing things, but for a period of time, is that there's an ongoing due diligence requirement as well, right? It doesn't start and end, and then you just do it. If you're going to do it right, you're going to have to continue to do it. And so that sort of made, I've stopped essentially. I don't really interview anybody who raises capital for anything unless I know their operation very well, or maybe I'm an investor or something like that. But, but these situations are like very difficult because, people have gotten tangled in capital raisers, cannabis deals, things like that. Like, people gotten really screwed. So
same here. The raising of capital right now, obviously it's a very important, you have to, obviously take it very, very seriously, so like you do. So that's why we, even though, we're not raising, we structure it too is just very, very educational. But you still, even if you're just educating folks or having someone on educating someone else about a topic, you really have to do your due diligence. And that's another thing that I would share with folks too, is where you take advice from and learn from is just as important where you eventually place your money.
That's right, because
so due diligence there too.
Because here's the thing, is that in the podcast space, that one of the things that's tricky for podcasters like you and me is, listen, once you interview somebody, you have, whether you intend to do so or not, you have legitimized them, at least in terms of your, what people think that you think of them, right? And so whenever I don't have that, I think I was thinking about having somebody on about horse racing and stuff like that. I have no idea what it is, but boy, I'm going to spend probably 20% of that show talking about, I have no idea, about this particular thing. Don't look at this as a recommendation from me, because I've had that happen where it's turned out ugly. And that's a tough one. So,
there's many different ways to invest and make money. So there are a lot of different ways. So, it's, it's, again, you have to know yourself too. If you're listening to this, you have to figure out, every single person know what their risk tolerance is. So, if you gotta set boundaries for yourself, which is probably the most important thing as an investor, and stick within those boundaries.
Fantastic, man. Well, it was good talking to you. We could probably keep going on forever, but I think that's probably a good place to end it. And yeah, love to catch up again soon.
Thank you so much for having me on.
And again, the podcast is the Cashflow Ninja. You can find him everywhere. I mean, the Cashflow Ninja is on video, audio, anywhere you find this information. Is there anything else that MC that you wanna reference, Ru, before we get off here?
Yeah, just cashflowninja.com is all of our past episodes. We've done over 1,000 episodes over there and interviewed people, such as yourself, the best minds in business and investing, talking about business, talking about real estate, commodities, crypto, blockchain, paper assets. We went very, very wide. So if that interests you, check us out at cashflowninja.com.
Thanks, buddy. We'll be right back. Welcome back to the show, everyone. Hope you enjoyed it. MC Lobsher is a real good guy. Check out his show. The Cashflow Ninja has been around for a long, long time, but like I said, MC's a guy with a good character. I do like him very much, and I think that's a good place to start for any potential podcast to listen to. Speaking of podcasts, I want to just plug again my own other show, which if you have not listened to, you really need to. It's called Sapio, Sapio, with Buck Joffrey, and this is a show that's basically based on one of my hobbies, which is health and wellness and fitness and longevity. If you look at me, if you look at my videos from now and you look at my videos from 10 years ago, I guarantee you're going to say, Buck, you look younger now than you did then. I guarantee you. And there is a reason for this. I'm doing all the things I'm supposed to do. And I actually have not measured my so-called biological age, but I can pretty much guarantee you it's a lot younger than I actually am. And it probably is younger than I was 10 years ago. Want to know how I'm doing it? Well, check it out. Sapio with Buck Joffrey. It is a data-driven show. Lots of information there that I think that if you listen to it, you may find that you look younger and feel healthier than you have in a long time. And a lot of these things that I talk about are not difficult to do. Check it out. Also, there's a website, sapiopodcast.com. There is a book that I've written, little book. It's called Living Longer for Busy People. And you might want to check that out as well. If you can't read the podcast, at least do that. This has been really a fun thing for me. So check it out. Let me know what you think. All right. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.